you are self-employed and you are filing your 2021 self-employed income taxes this tax season in year 2022, you could be throwing away thousands of dollars. You could be paying thousands more in your self-employed income taxes than you actually need to. I'm going to show you how taxpayers like you save an average of over $12,000 on their self-employed income taxes, utilizing self-employed tax deductions and write-offs to reduce their taxable income and save thousands of dollars. First, this video is sponsored by 1-800-ACCOUNTANT. 1-800-ACCOUNTANT is the nation's leading virtual accounting firm for small businesses. Their goal is to help you save more on taxes and spend less time and money on accounting so that you can focus on your business. Built with a team of experienced CPAs, they have served over 90,000 businesses and operate in all 50 states with dedicated experts in every industry. 1-800-ACCOUNTING offers affordable, flat-rate pricing and a 30-day money-back guarantee. Let 1-800-ACCOUNTING help you with your business taxes, your business startup, payroll, and bookkeeping so that you can focus on your business. I am not a CPA or a professional tax preparer, so I want to make sure that you understand that this information is coming directly from either the IRS or from 1-800-ACCOUNTANT. 1-800-ACCOUNTANT has a fantastic blog with lots of resources and information on it, so I'm going to link the articles that I'm referencing in the description down below. Tax deductions work by reducing taxable income and therefore lowering your taxes overall. They essentially exempt portions of your income from being taxed. Now, in order to write off your expenses, the IRS does have a few requirements in order to make those expenses classify as being qualified. First, your expenses have to be relatively normal to your industry, and they must clearly be in support of your business's fundamental operations. Next, you must be able to provide adequate documentation of these expenses if you ever should need to prove that they actually were for your business. First is the self-employment tax deduction. As a self-employed individual, you are subject to paying self-employment taxes, which equates to 15.3%. That breaks down to your Medicare and your Social Security. If you were traditionally employed, then your employer's payroll would take care of that, but you're not. So therefore, you must pay it. But the good thing is that you can claim a deduction on half of that self-employment tax amount. 7.65% of your self-employed taxes can be deducted. The next deduction is the one that seems the most obvious, and it is your operating costs. Anything that you need in order to have your business in operation can be written off as a tax deduction. Next, you can deduct labor. Any employee payroll, contractor labor wages, bonuses, or commissions are all deductible. Next are professional fees. Next are professional services. If you hired a lawyer, an accountant, or some other type of professional to work with you in your business, then those fees are tax deductible. This also applies to fees that you might pay for something such as a membership or a subscription, as these are deductible as well. Next is the home office deduction, and this is a big one, but there are some specifics here in order to qualify. You cannot simply work anywhere around your house in a communal space or a space that you use for something else and claim it as a home office. You must have a dedicated space that is used only for business and is the primary place where you conduct your business. Now, if you are eligible for this deduction, you can then claim a portion of all of your home-related costs as business expenses. Next is a deduction for depreciation of property. If you have purchased a large investment in terms of business property, then you shouldn't necessarily deduct the cost of the whole investment right away. What you can do is to deduct the depreciation of value over time. Next are deductions related to marketing and advertising. If your business is spending anything for marketing or advertising, such as creating business cards, social media ads, SEO services, influencer marketing, or a variety of other things that would fall under this category, then it is deductible. Next are organizational expenses. Everything you need to organize and establish and set up that business is going to count as a deduction. Next are your internet and phone expenses. 1-800-ACCOUNTANT states that for a home office or a personal phone that you also use for business costs, you can deduct a fraction of the total cost based on an estimate of your relative business use. If you have a dedicated phone or internet service plan that is used only for businesses, then you can deduct the full cost. Next are your building costs. If you rent or lease a space that is dedicated for your business, then you are able to deduct that. In addition to just deducting the rent, you can also deduct anything that is associated with maintaining or operating that space, such as utilities, repairs, insurance, etc. The next deduction is business, travel, and transportation. As long as your trip is intended entirely for business purposes, then every expense incurred on that trip outside of your regular area is tax deductible. The next tax deduction is vehicle usage. Even if you own a personal vehicle and you are utilizing it only partially for business, you can still deduct those partial expenses on your tax return. Document your mileage when you use the vehicle for business purposes, and this way you can claim a deduction based on your specific mileage. It should be noted that this does not include travel to and from your office and residence. Next is professional education. If you underwent any courses, any developments, any seminars, etc., that led to the development of your business or yourself as a business owner, then those are tax deductible. Next, you can deduct things such as your insurances, your taxes, your licenses, and your permits. All of these are necessary costs associated with the operation of your business. Next are banking costs and credit card processing fees. These, once again, run in line with normal operation of a business. If you are holding money in a bank and you receive charges for that bank, or you're collecting money and having to pay a fee into that system, then it is tax deductible. Next are meal deductions. Now, this does not mean that you can deduct your lunch every day from simply working and needing to eat, but rather if you are specifically taking your clients out to a meal, or if you're bringing food back into your business to be consumed by your employees. Generally, meals are 50% deductible, but there are a few meal-related costs that can be 100% deductible. In order to be 100% deductible, it must be food or entertainment provided as part of a party for the entire company at once, or it must be something officially included as compensation for your employees for whatever purpose. The last deduction I want to go over with you today is on retirement contributions. The amount that you're able to contribute depends on what type of retirement plan you currently have set up, but every year you're allowed to contribute a maximum amount to your retirement plan. Those contributions are tax deductible. 1-800-ACCOUNTANT recommends that it would be a smart idea to max out your deductible retirement contributions before the end of each year, especially if you are likely to find yourself in a higher income tax bracket. Why? Because this allows you to defer paying taxes on that income until you withdraw that money at a later date. And lastly, if you have not yet seen my video about self-employed sick leave due to the pandemic, next I want you to click on that video to see if you qualify for an up to $5,000 deduction based on that pandemic-related requirement. Okay, you guys, I hope that was helpful. Please remember to click the link in the video description down below in order to access 1-800-ACCOUNTANT's wide variety of services.